All right, boys and girls. Quick update. So, obviously, thus far, our model's been incredible, right? Last update yesterday, I talked about how when I got it down at the bottom here, this was the time to get in mid to long term hold. Just to repeat myself once more, you can see it dipped after I got in. Now, I had gotten into a short term trade as well with a stop loss that was only 2.5% below my entry. So again, for those who haven't heard me talk about this, when I get into those short-term trades like that with a really tight stop loss, I usually do that a lot. But in cases like this, as I said on those videos and those live streams, that was the time to get in mid to long-term holds where you just buy and you don't worry about quick little moves, because I totally expected a pretty high likelihood of a quick dip down with a quick wick that could hit my stop loss, take me out, and then it breaks out and goes up. So I only got into a couple trades that were those tight stop loss short-term trades. For the most part, as I keep saying in pretty much every video, I've just been buying and holding. And I'm not worrying about setting a tight stop loss because the probability is way too high with the levels of volatility we're seeing that you're going to get quickly stopped out. Once we stabilize and you get a nice reset on the Stoch and you have a repeatable pattern and you can predict the trend reversal, then you can get into those. So that's where we are now. We're approaching that point. We're seeing the 4-hour finally turn down. We broke up exactly like I anticipated. If you saw my last video, we got up to the 55 EMA here. And then I said the next strong resistance is going to be the 99 in the bottom of the cloud. And you can see all these candles were fighting against that resistance. So the resistance was there and it worked. Then when it finally broke through resistance, what I also said on the other stream was we have the trendline resistance at the top of the cloud right here. So that was a really high probability for a top anywhere from this range all the way up to 39K. I actually thought we would get this reset on the 4-hour and come down a bit before we broke into the cloud. But it came down ever so slightly and then immediately recovered and went up because we've been so aggressively bullish as my models have been anticipating, right? 5 to 10 day bull run at the very least, possibly a 4 to 8 week bull run incoming. But at the very least, we get that 5 to 10 day bull run coming. So the hourly model has been pretty intact since we went hyper bullish. This is where we were hyper bullish on the Stoch. Price kept going up when the Stoch was high. Then we finally got a reset. And then at the bottom of the Stoch's the time to get in, right? So if you were to get in here, it'd be a little early. I'd wait for the bottom of the Stoch. But at the same time, I kind of want to wait for the 4-hour to come down more. The 4-hour Stoch can totally go hyper bullish just like we had on the hourly, right? It can get high and then just keep going up. And that started to happen. I was asleep because I fell asleep really early last night, but it looked like we started coming down and the price kept going up, and I didn't see it at the time, but that looked like we were going hyper bullish. It looked like we were just going to continue upward, but that resistance was there to bring us back down, luckily. Now, I say luckily because even though I have decent sized positions and I've been accumulating, like I told you, since I predicted the bottom, the local bottom as well as the original bottom, but the most recent bottom, I called it right down here. I had gotten it down at those levels, so I obviously want to make as much money as possible. But I need that retrace on the short-term time frame so I can get into those shorter-term trades. I want to get into trades with a tight stop loss. I want to be able to buy and place a 1.5% stop loss, a 2% stop loss, really close to my entry price, sort of like I did down here, except down here I was really confident that it was actually going to go down. So I only put a little bit of money at risk. Coming up, when we get this next reversal, I'll be a lot more confident on my timing of the reversal if the Stoch is lined up. So right now, the 4 hours coming down. If the 4-hour fully resets later tonight into this evening at some point, if we get that 4-hour Stoch down below like 25 and it starts to turn up as the hourly is reset, I'm absolutely going to get into much larger short-term positions there. Now, we could retrace on this move and hold right at this trend line support. We might not actually go down that far. It might just stay here and move mostly sideways. We'll see. Overall, until we get above the cloud, we're not going to see the explosive move that we would otherwise see. So we might come back down and ride along the cloud a bit. We might hold at this trend line support. I'm not entirely sure yet. Short term, again, it's really hard to predict, and that's why I wasn't doing those short-term trades with a tight stop loss yet. It's just too risky. And at this point, it's still too risky, obviously, because we're coming down, but once we do settle and we start to get that bullish reversal, that's going to be the time to enter the short-term stuff. As I've been saying all along, buying mid to long-term holds is fine. If you're not worried about little moves up and down and you're waiting for the bigger, longer-term move over days, weeks, potentially even months, then you could just buy now, because you're in a great position to do so. We're at a great price, and I totally expect us to be substantially higher in the near future and in the foreseeable future after that. I don't expect us to go below 30K, as I've been saying. Every time we've dipped down, I've reminded the group, guys, I don't think we're going below 30K. I think we're going to hold, and every time we have, we're actually setting a new support at 31 instead of 30. We had dipped down all the way to 30, and then the last 2 wicks down both held at exactly 31, or very, very close to 31. So that seems to be a new support. But I think we're going to push up from here for a while because, again, we had that weekly model, and the weekly reset is big. That weekly reset getting down to these lower levels and the next push up opens us up for a huge, massive run. We have that vertical cloud wall on the weekly. That's a really bullish indication as well. There are tons of aspects to this that make me feel exceedingly bullish. So going out to the monthly, we're still pretty high on the Stoch, but that doesn't mean anything. We've been hyper bullish for a while. The Stoch on the monthly doesn't really mean anything right now. Again, back here we were hyper bullish at the last bull run, hyper bullish on this bull run. We could continue into a long extended correction. If that were to happen, we wouldn't reach all-time highs again on this run. And that's the last thing I wanted to mention before I do a more detailed deep dive into some other charts for the private group only. Because I'm going to share this video publicly. Obviously, if you're watching this and you're not in my paid group, then you know that. So looking at, zooming out, looking at it from the monthly, you can see that we had all-time high for a while. We had that hyper bullish run where the Stoch was high and elevated. Now, when that happened in 2017, and then in 2018, we began that long extended correction. We're going to be getting one of those long extended corrections. I actually got faked out last year, and I thought when the Stoch maxed out, I said either we go hyper bullish and go on a bull run to all-time highs, or we're going to come back down here and get one more multi-month correction before the big breakout. And I was saying it for a while on Twitter. I was telling everybody, hey, there's a really high probability we get this multi-month correction, and it just never happened. It never materialized because we went hyper bullish. Now, if I'm looking only at this chart, the last time we were hyper bullish with the elevated overbought Stoch without a correction was in the 2017 bull run. And then when we started that correction on that Stoch oscillator, the momentum indicator, we saw the long-term extended correction. There are a lot of differences between now and then. There are fundamental differences. There are a lot of new aspects of the market psychology at play. There are real world geopolitical circumstances that are dramatically impacting the market. We're seeing adoption of Bitcoin in countries as currency. We're seeing companies and more large corporations that are showing interest in crypto and taking Bitcoin or accepting other cryptocurrencies, potentially accepting other cryptocurrencies. So there are a lot of variables in play that are a lot different, but we did need a correction. So this is a decent correction at this point, but it's also not astronomical. It's not that crazy to get this sort of correction before another leg up. The question is, do we get a long-term extended correction that takes anywhere from 6 to 12 months like we had in 2018? So the last time this happened and we started correcting on the Stoch, we did continue downward, and it took the entire time before we corrected. There are a few ways this could play out. We could just continue upward because we don't really have that repeatable of a pattern here on the monthly Stoch. It's pretty much been overbought or oversold, hyper bullish or hyper bearish most of the time. So we could just continue upward and go back to all-time highs, but this bounce, at the very least, based on the weekly models and the daily models, I'm anticipating a multi-week bounce anywhere from 5 to 10 days initially, then a correction, and then another leg up for 5 to 10 days. But more importantly, on the weekly model, I'm expecting anywhere from 4 to 8 weeks to stay bullish. We're only a few weeks in, and I think there's another 4 to 8 weeks from this point, including this one. So after this one, another 3 to 7 weeks potentially that we can be bullish. So that could take us up quite a bit, but still not get us up to all-time highs, right? So imagine if that were to take us like this. We had this correction. That's a big B wave. Takes us back up to, say, 55K even, and then we come back down all the way to 15K. That is still theoretically possible. So I'm not necessarily saying we're definitely going to all-time highs, but I am expecting a large move here. So with the continuation of this bullish breakout, I'm still in and I'm holding. Once we approach higher levels, if we start to see the market getting overextended, when we see particularly the weekly Stoch getting to really high levels, that will be the point to either liquidate or to take substantial amounts of profit. At this point, when the Stoch got up really high, that would have been a good time where I would have taken a large amount of profit, and I wasn't even fully in the market yet. Because I was in the market, I had gotten in at the end of last year, and I had been in all along since 10K and before that, but I didn't really get fully into the market until December of the end of the year, so really at the end of the year, so or November and December. So I missed out on like a full month where we were hyper bullish and starting that bull run before I really got in with the rest of my capital. I was in day trading, but my longer term bags weren't as full as they normally would have been. If I was fully in, I would have taken profit there, and then it would have continued upward as we were hyper bullish because I would have expected this pattern, right? Up, down, up, down, up, down. So you're seeing that pattern repeat itself. You're expecting it to happen again. Eventually, it's not going to. Eventually, it's going to just continue upward in price as you remain hyper bullish with overbought Stoch. And when that happens, you could just hold and ride the wave up. You don't know exactly when the top is going to be. So in this case, when the weekly does eventually max out again and we get to those higher levels, I'm probably going to take profit because I'm not going to expect it to go hyper bullish. It's possible that it can, and if it does, great. I could always get back in, but I'm going to want to take out a substantial amount of profit first. So the daily is halfway up on the Stoch. We started the initial breakout up. We definitely have to get above this trend line. That's going to be key. So again, looking at the 4-hour model, you can see the top of the cloud happens to match up right where this trend line resistance is. So together, in unison, that's going to be big, the next attempt up. The way the timing should work out, I would expect within the next several candles, we're going to bottom out on the 4-hour. Once that happens, some point later into this evening, I would expect, we might go below this trendline support, or the trendline support may hold. But either way, we're going to make that next push up. That next push up is going to be the big one, and if we can break above the top of the cloud and this trendline resistance here, we're going to blow up and go back into the 40s, well into the 40s. Likely to 45K on that initial move. But we definitely need this short-term correction here. How long it's going to be, I can't say, but I'm thinking later this evening would be a good opportunity to potentially look for those entries. We'll have to see how the various time frames line up, and we might also see an early bullish reversal because this really hasn't come down that much. It's been more of a sideways correction than a completely downward correction. All right, that's it for now. I'm going to do another video, or possibly, you know what, I'll do a live stream with my premium group so we can look at the charts for the altcoins. I'm going to wait a few hours till we come down a little bit more and the Stoch comes down a bit more. Then I'll be more confident in potentially anticipating bottoms. But for now, that's the overall view. I would trust it. My model has been absolutely on fire. So if you're looking for potential entries, it's a really good time to wait and target those entries. But if you're getting in long term, it's not as critical that you get the best potential buy-in. But obviously you want to get in at the lowest price possible, so waiting for the Stoch to come down a bit more is definitely a good idea. Alright, I'll do another update later that I'll share publicly, but for everybody in the group, I'll be available in the chat, and we'll do a live stream soon with the premium group. Alright, trade safe, trade smart. Catch you later.